Welcome to TradeTheMBA.com. This is Jones Reports for the 3rd of October, and got a continuation of the same magenta over yellow. Short's still continuing to rise within this, so that's an interesting warning sign as you make new highs. So they're setting the stage for, breaking out to new highs to attract more money that they can short into. Now, will they be successful in overwhelming the buy side of it? Well, that becomes the question. And new funding money is about to arrive, so making them pay more for that new money coming in is just a great opportunity. The question though is, do they have enough to continue to sustain push through? From a DOC standpoint, you can see that neutral, like everything is met all at one point, so it's waiting for a breakout. The histogram's still rising, but hasn't reached the level of the previous peak. So we'll see it in the MBI readings before, and certainly intraday. I already mentioned the volatility for this month would start to rise. There's already been fairly significant intraday action, so exactly what was expected. From an NQ standpoint, you see even stronger move there, but MBI White still rising, not over the 25 yet, so not particularly frightening at this particular stage. And here the difference is in the DOC. You can see stronger crossover of green over the cyan, and cyan is under red, always a buy. Indicated by that little lovely cyan candle there, lets you know that that took place. Always good to see those visual representations. Treasuries, of course, still doing absolutely nothing. Yield slightly fading simply because the expectation is the Fed seeing the weak numbers from labor, and that might actually do something. I wouldn't count on it, but the market certainly is pricing it in. Significant one here is oil, and this becomes a real question mark because you combine lower oil and even with the modest decrease in immigration, you have lower demand, and lower demand with the Saudis increasing supply to the U.S. already being at significant volumes. That will put pressure lower, and that will be an interesting one because you get towards the 50s, and then you're really going to be questioning whether or not U.S. suppliers can maintain themselves, or you'll get some kind of liquidations, and that's sort of what the Saudi play would be in that particular case because they can outlast the dip in price. It's not going to affect them. Though the Russians are claiming that with the activities that are going on, you could see a squeeze in oil. So the threat of the French that just boarded a shadow tanker of Russia. The escalation from the Europeans is clear. They want war, and everyone's excited about it because that's why the euro is where it's at. Because what's justification from an economic standpoint? They're not even close to where the U.S. is at the production level of value of goods. So it's kind of an interesting setup. But you can see with the problems that Germany's having and some of the others economically, war, natural conclusion. You got to do something. Is it a smart one? I'm not making that judgment. It's just that where they're looking at it from the economic standpoint of it. From a gold view, yeah, it's going to continue to rise. Again, all those shifts in gold as far as its value makes a difference. And we said that crypto would take off, and that was back over here. As we got down at the bottom, we knew it was just a soft liquidation portion going on right there, and you can see the return back up super fast. Not even hesitating at all. Same thing with ETH, just a little bit slower because it had already had its ramp up. And there isn't anything really new on the news front as far as those are related. From an intraday standpoint, though, you can see we had the rise, swift fall, all the way return back up, and actually making new highs right now in the pre-market action with an MBI White lead at this particular stage. But you can see magenta, forced cover short all the way through that. Makes it real easy to see that setup build and played out perfectly. So from that standpoint, as long as magenta doesn't fade back, it's going to be okay. But could that happen right at the intraday open? And then you look at the shakeout, starting to get close to this previous histogram, but if it doesn't quite get there, that's going to be a significant pullback into it. It's not quite positive extreme in that pre-market yet, but it's not over. So there's always that potential. And then you can see here's was intraday, yeah, fade early, puts got all excited, and they flipped them around and brought it back up for the call buyers. And to end the week, you're going to have that option play, and that's been the strongest factor. Post market here, you can see the Asian session was just through the roof. All the way, and the European session just kind of holding off in a flat zone from it. But all good stuff. Keeps moving, and nothing dramatic, so to speak, which also puts quite a bit of pressure over the edge there, where if something does happen, it will be a significant move. So always prepared for that construct, but just following the readings is doing just fine. Anything relevant, I'll put it on our team chat. Have a good one. Trade well.